Good morning. Good morning, and thank you for joining us. I just want to briefly state that the Akron-Cleveland Association of Realtors is a professional organization for real estate professionals who sell real property and businesses that work in or with the real estate industry. We provide a variety of services to our members, as well as serve as advocates for the rights of private property owners. In short, the Akron-Cleveland Association of Realtors is the voice for real estate in Northeast Ohio. Today's panel discussion will address how the COVID-19 crisis has affected and may continue to affect commercial, residential, and property management markets in Northeast Ohio. I am Allie Whitley, and I will serve as the moderator of today's panel. I'm a residential realtor and real estate educator, and I've served buyers and sellers for many years. I'm active in the Akron-Cleveland Association of Realtors, as well as Ohio Realtors and the National Association of Realtors. On our panel today, we have David Browning, Managing Director of CBRE in Cleveland and responsible for client services throughout Northeast Ohio. Dave has been actively involved in the commercial brokerage arena for more than 30 years. Jim Fox, broker and vice president of general sales and operations at Stauffer Realty. Jim has a keen knowledge of the residential sector and actively serves at Yes MLS and at the Ohio Realtors. Akil Hamid, broker and founder of Fast Real Estate Services. Akil manages residential and commercial properties throughout Northeast Ohio. Just a couple of reminders before we get started. Please use the chat feature to ask questions. Today's webinar is being recorded, and a link will be available for anyone who misses it. We are also streaming live on Facebook, and we will finish at 11 a.m. With that, let's get started. So David, if you could just tell us a little bit more about yourself, and I have a question for you. The first question is, what are your overall impressions of the pandemic's impact on segments of the commercial industry?
Excellent. Well, thrilled to be with all of you. Obviously, these are extraordinary times, and I get to view it from a couple of different perspectives. I've been the market leader for CBRE. We're a global commercial real estate firm, and I'm responsible for all of our business lines. Therefore, I touch office, industrial, retail, investments, multifamily, property management, and the like. So I can address a lot of different things. Given that it's May 1st, I literally this morning sat down on my computer, and sure enough, there were some statistics. And the statistics that I saw were that our transaction volume in the month of April, when it was a year-on-year comparison, dropped 30% in the month of April. So the markets are significantly affected. But you can't just look at the overall market. I'll get a little bit deeper into the weeds as to what's going on. The most active segment right now for us is the industrial market. And why is that? Well, it's because of supply chain and logistics. We absolutely need those things. We've been fortunate enough in recent years. We've been the ones that have represented Amazon in all of their transactions in Northern Ohio. And literally, we just signed 2 more transactions in the past 45 days. So they're active, and other supply chain entities are very active. But then you get to the related side of it, which is retail. Retail is the most affected. And obviously the stay-at-home and the state mandate has absolutely devastated retailers, and they're in survival mode. So we're really seeing, okay, there's retailers that didn't pay rent in April. Now here we are, May 1st, we're gonna see, are they gonna pay rent then? So, but retail is so tied to logistics. What's fascinating with this COVID-19 situation is the fact that more and more of us are getting more and more comfortable purchasing things online. And a lot of comment is that it may have accelerated e-commerce and online purchases by several years with this situation that we're confronting. The good news is that, we'll get through this. Retailers need to figure out how to open. And we're actually tracking 60 active retailers around the Midwest that are actually looking to make some commitments and view this as an opportunistic situation. So I think once we get through this next phase, and it may be June, July, things ought to brighten up a bit. I'd also make a comment, excuse me, related to the office market, that office deals are kind of in a pause mode. People are avoiding making long-term commitments. And when you look at it, some significant things are happening in the office market. And just look at all of us. Here we are in a Zoom call. We're working remotely. So people are avoiding getting together. And we think that has some near-term and long-term implications for the office market. The other concept that is hitting home, and we all know it, is social distancing. Well, what's that going to do to long-term occupancy trends and office design and long run in terms of demand? The last comment I'd make about the overall commercial real estate market is on the investment side. Basically, investment activity in the Americas in the first quarter and in the month of March, we've got latest statistics, down 40% year on year. So, and the hotel sector, even worse, 47% decline. Wow. So that just gives you a little bit of flavor in the commercial real estate industry and the segments.
Okay, thank you very much. Thank you. Akil, welcome. And I have a question for you. And then if you would also share a little bit about yourself. The first question we have is, how has your residential property management business been affected by COVID-19? And what business measures have you put in place to address these circumstances?
All right. Well, thank you, Allie, and thank you to ACAR and the team for putting this great event on. There's a few things I'll say first. Just a little bit about myself. I'm the broker again of Fast Real Estate Services. We specialize in residential, commercial property management, and we have a line of consultant business that we do. So on a daily basis, as the broker, I'm involved across 4 different sectors, working with a team. I have a team of about 20 agents and then support staff. And so it's a very interesting business model. We are what I would call middle market. So we're working with private investors, landlords that are purchasing smaller multifamily buildings, smaller strip centers. We are assisting in the operations of those assets. And then as well, we assist our agents in helping clients acquire. So from a property management perspective, some of the things that I've seen with our tenant population, for one, has been they are not really able to take advantage of deferred rent payments, mainly because you see that the landlords are private landlords. They are smaller landlords. They may own, 1 up to maybe 10 or 12 properties. Those individual landlords were not afforded the opportunity to be in a larger institutional program where they can get deferments and with their lenders. So they then can't offer the tenants, a chance to maybe not pay rent for a period of time. So what we have seen is that the tenants are doing their very, very best in making rent payments. They're utilizing their unemployment, their stimulus payments that they've received. And, what we're doing at the company, we're attempting to, provide a little less structure for them as far as making sure that rents are due on certain due dates. I would say we've become a little lax over the last 60 days just so that we can assist them in their financial crunch and determining best practices for them. As well, what I would say is that we're not charging late fees. we've limited late fees for the tenants during this time frame. And then the landlords that we have been able to communicate with that are able to offer some relief, we've allowed some tenants to be able to pay 50% of their rents. And those were great opportunities where the landlords were in positions to offer some type of discounts for the tenants. But overall, as a company, our goal really is to make sure that we're on the front lines with these individuals. Many of our tenant population are frontline workers. They qualify for many of the benefits that are currently available. And we've just been a ear as well as providing resources to them.
Very good. Very nice. Thank you. Jim, can you tell me what the residential real estate market will look like after this pandemic, in your opinion?
Thanks, Allie, and thanks for Akron Cleveland Association of Realtors for having me on and sponsoring this great event. I've been in this business for 26 years, and it never amazes me the change that we always have to adapt to, whether we like it or not. And this is just one of those changes that I think we're just having to work through. In the state of Ohio, the residential real estate business will be probably one of the last sides of real estate that will feel the effect of the pandemic, primarily because the state of Ohio recognized real estate as an essential business, and also just because of our business cycle that we're pretty much anywhere from 30 to 60 days in the rears. And what that means is that if a home was to transfer title today, it was because of a contract that was written in February and March. So with that being said, we're going to see the ripple effect of this in the residential side, either late June or early July, and with the hopes of it being back on track in the third quarter of this year, third quarter of this year. When I listen to Dave and I listen to Akil, they're facing things right off the bat. You're seeing changes in their side of real estate so very quickly. In us and our side, residential, like I say, it hasn't quite hit yet. I think people are wanting to move on. They're wanting someone to tell them it's okay to buy and it's okay to sell. And for some that are on this call, it may be hard to believe, but we've had continuous market activity of people buying and selling. And with today being declared opening day, according to Governor DeWine, it's time to get out and find your dream home to be quarantined in. Now, again, please don't take my comment to sensationalize being quarantined as a reason to purchase a home. But unfortunately, the reality is that we are experiencing living in our home and living with others in a way we never have. This experience has been stressful, and for many, it's given thoughts of making a change with their housing needs. Obviously a larger space, maybe a dedicated home office, a larger yard, even downsizing, or sadly, relationship separation. The song title, How Do You Like Me Now by Toby Keith has never taken more meaning than it has in today's personal and real estate world. But with that being said, I do believe this additional new wave of people, buyers and sellers entering the real estate market due to what I'll call the pandemic factor, will add to the buyers and sellers that are currently planning to purchase a home this year. And with that added source, I feel that the real estate market will explode with activity. So low interest rates, the need to make a change, sellers who have gained equity due to this current market conditions, I think are perfect combinations for a robust real estate market.
Very good. Thank you. And Jim, then I have a follow-up question for you. What changes or new expectations will buyers and sellers have after this pandemic?
I think there's going to be 3 points. There's going to be convenience, lifestyle, and safety. Sellers are going to require more from buyers, and I think buyers are going to require more from sellers. Many of us are taking time to reflect on what's important to us and our families, and how we can keep each other safe while still, maintaining some of our current lifestyles. And I do see a shift in people's thinking more about their needs and less about their wants. For buyers and sellers, they'll most likely take a different approach when it comes to purchasing a new home, and for sellers on their existing home. So, Allie, I think some of the trends that we're going to see is buyers wanting to see more home virtual tours, higher quality of photos available to make sure that the property is the right property for them before they physically schedule an appointment to enter the property to view the home. The sellers, I think, are going to want less traffic in their household, and may even require buyers to provide proof of funds or a pre-approval letter from a lender prior to a showing to limit contamination from a potential unqualified buyer. Buyers will probably want, when they're physically viewing the home, to make sure that the seller has all doors and cabinets open with all lights on, just to avoid any contact. And that holds true for the buyer's agents representing their clients as well, for safety. And lastly, I think both buyers and sellers will demand more streamlined approaches when it comes to transaction processes from their agents, brokers, lenders, escrow agents, and officers, and more frequent and safe forms of communication.
That's great. Thank you. Those are great points. Good. Dave, I have a question for you. What are you seeing playing out between the landlords and the tenants at this time?
It's a fascinating time, and Akil touched on it briefly, but I'm seeing both sides of the equation, because we represent a lot of corporate occupiers in helping them manage their global real estate portfolios. So my people have been in negotiations on rent relief, 2,000 to 3,000 transactions that they're trying to restructure on behalf of corporate occupiers that are just looking to save cash. And several have not paid April rent. We'll see what happens with May rent. At the same time, we also manage a ton of properties for owners. So you're trying to figure out how to respond to these requests. And most of the requests, it's happening in retail, it's happening in office, and it's happening in flex, pretty much the property types where we're seeing it. And really what the landlords are requiring is, look, prove your hardship. We need some, how are you being affected by the pandemic? And then, have you applied for public funds? And if they receive that, then the owner is going to look for rental payment of some kind, right. Whether it's a percentage, 30%, 50%, as Akil said, or outright full rent. And then how are you going to structure it? Is it a pure abatement where you're just saying, don't worry about it? Or are you going to have them pay the rent on the back end, kind of amortize it or extend the term of the lease? Or if you're giving that tenant a concession, are you getting kind of a quid pro quo from them where you're saying, all right, you have maybe a termination option or some exclusivity in the shopping center. The landlord's trying to claw back and get some concessions from the tenant in exchange for the abatement period or the deferment of rent. So it's a very dynamic situation. In the first couple of weeks, right away, tenants started looking at all their lease clauses, and they started looking at, interruption of essential services. Well, does a pandemic qualify? Maybe, maybe not. Do you make an insurance claim on a casualty policy? Well, probably not there either. What about a condemnation, which is a public taking of the building? Well, based on what various states did, does that qualify? Maybe, maybe not. And then, of course, people were thinking force majeure, which is typically, you think about it as a war, a civil uprising or whatever that allows someone to not perform under a lease. So at first, tenants were thinking there are all these legal arguments that this pandemic allows them to not pay rent. But pretty much the experts have weighed in that that's not the case. So what we're seeing, and Akil alluded to it, is you've got landlords and tenants that really need to sit down and go, look, we're in this thing together. Let's try to work it out together, because a lease, it's a contract, but it also is a relationship. And that's what we're finding, just an open, honest conversation. And we're all in this together. Let's try to work it out.
Okay, very good. And David, what issues do you see in play for property managers as we move on from the stay-at-home orders?
Oh, that is a very fruitful area of conversation. And, you know, we, as someone said, our company, well, we're the largest property manager in the world. And we already, because we manage properties in China and throughout Asia and Europe, we've started to confront all these issues as, you know, those countries are ahead of us in terms of having to deal with what COVID-19 means. And then how do you move forward and reoccupy space? So we've learned a lot of lessons there. And on April 22nd, this will just give you a feel for some things. I was on a webinar like this, and it involved the CEOs of some of our largest supply chain partners that we use in managing properties. And one of them made the comment that what 9/11 did to the security business and security precautions in our society, now the pandemic is forcing us to deal with cleaning and building maintenance issues. So this is a watershed moment that has near-term implications and long-term implications. And so just think about it in terms of cleaning specifications. But just to get these buildings operating, we've got to change the cleaning specs. And that's it involves manpower, it involves technology, and it involves supplies, which means it's going to cost more to operate buildings going forward in order to deal with these issues. And then let's think about the building systems. We've got to implement, going forward, touchless technology on doors, on elevators, on washrooms. And then think about the mechanical systems. You probably have to have improved and increased ventilation and touchless controls. So those are capital expenditures that owners are going to have to confront and probably will be passed on to tenants. But then let's think about what we're confronting right now. We're at an interesting point in time, and we manage some big downtown office towers in Cleveland. Well, the governor said, all right, well, I would say these buildings have been open. However, with the stay-at-home order, the buildings, the major ones have been less than 5% occupied since the stay-at-home order came out. Now that the governor is going to allow us to reoccupy these buildings as of Monday, we don't think that tenants are going to rush into these buildings at all, because when you think about the property management business, there's three elements of it. It's the community piece with these government requirements and regulations. Then there's the building owner piece. And, and the building owner's got to deal with distancing issues, cleaning issues, signage issues, and supplies. Just think of, like in our building here, the E&Y Tower, we're only going to allow 2 people in an elevator at a time. Well, how do you keep 6-foot distancing going through the security turnstiles and then getting into the elevator and up the building? It presents some challenges just from the building side. And then think about all the tenants in the buildings. Each and every tenant has to figure out their own strategies that goes on within their space and with their employees in order to keep everyone safe. So it is a very, very complicated issue on the property management side, and we still have a lot to learn near term and long term.
Right. Yeah, there's just so much to think about in the background that not everybody would realize, unless you walk through each and every step. Thank you. Thank you. Akil, I have a question for you. How have you motivated your team to stay relevant in the commercial and residential markets during these uncertain times?
Thank you, Allie. So yes, Initially, as the pandemic began to expose and develop in its process, what I realized is that they, the media started to talk about the diversity in the pandemic and what the disparities were in the minority community. And being that I'm a minority broker, my team is predominantly of a minority segment as well. I had to take a step back for a minute so that I could really not continue to, just look at this as a real estate business. As agents, what are you going to provide back to the company? What things can I provide to them? And really look at the individual agents as a person. They have families. They're dealing with issues that maybe they had never ever thought that they would ever have to encounter. So, the media shows that African American and Hispanics are leading in many markets in this COVID, as far as being, sick from pre-existing conditions. And so I looked at all of that and I said, okay, well, how can I motivate my team to not only focus just on the real estate side of business and look at other ways that we could help them to improve? And so we have been working with 4 different key areas: prayer, family, their individual self, and then their business. And I thought that that would be a good way, because I know that that's kind of what I've been doing. I'm home right now. Most of my agents are working remotely. We've limited going in and out of the office. And so what can you do for prayer? You can take some time to meditate. You can go for a walk. Really take some time to really think about our country, the people that are on the front lines, and really take some time to focus in that particular space. That has been one area. As far as family is concerned, I've spent a ton of time with my family. My kids will put together really cool dinners in the evening. We had a beach night. Spending time with your family, just talking, catching up on things that maybe due to our busy schedules as real estate professionals, we sometimes will miss those opportunities. And I think this is a really great time to pick up some of those lost things that you've had along the way being in business. And then for yourself, exercising is one thing. Most of us are, if you're at home, you're in and out of the refrigerator, you're on meetings, Zoom meetings. But if you're not taking the time to do some daily exercise, or at least a few times a week, I've made a regiment to get up at basically at 7 o'clock. I'm out on a run most days. And I'm encouraging my kids, who are very active as well, and so I tell my agents, make sure that you're doing some type of exercise, do some things that maybe you have always wanted to do. If you love to read, but you never can finish that book, this is the time to do it. And finally, then on the business side, just making sure that they are focusing on their business. There was an article that I sent out to my team. It was from a website called theclose.com. And that's CLOSE.com. And it gave 21 things that real estate professionals can be doing during a quarantine period. And they were some phenomenal things like maybe working through your CRM system. I mean, how many of us agents, your CRM system has so many people in it, but you really need to get in it and clean it up. And so I gave them that so that then they can start working through that. And we've had Zoom meetings several times just to really just take some time to see what each other are doing, and really just being very personable during this time. And that's really what I've done. And I really encourage other companies as well to do the same.
Yeah, I think that's awesome, Akil. Just it's a matter that, you know, all of us need to think about. Really, it's not just business. It's not just personal, but it's the entire, you know, system and the entire self that we need to pay attention to. So I think it's just great that you're, you know, promoting that to all of your agents that you work with. Awesome. Jim, I have a question for you. How has this pandemic changed or affected the way you do your job?
Well, I think the biggest change is communication, how we talk to our buyers, our sellers, and our agents. And, you know, although things like virtual home tours and live videos and transaction management platforms and internet chat services already exist in the real estate industry, we're seeing an accelerated movement towards adopting these digital approaches to better communicate with our clients and our agents. Obviously, the great example would be Zoom. You know, the platform has been around for a while, but it took a pandemic before it became a household name and something we must service. Another plug for Zoom, right? So since the stay-at-home order came down, Stauffer Realty quickly, you know, embraced these digital tools like Zoom in order to continue to educate our agents and increase the rate of communication amongst ourselves. You know, it has been truly, we've had success with this, and the spirit of cooperation from sharing from our agents and our customers and our realtors has given us a much better way to deliver a level of services, the tools, the technology, the training and support. And throughout the course of these past weeks, you know, we've several times a week, we broadcast and update weekly stats, what's happening in the marketplace, personal chat sessions with successes and challenges and struggles. And then we've had dozens of different educational skill building, live stream coaching sessions. So like Akil has said, I think there's more to this business than just the business. It's the people, it's relationships, and, you know, and it's your reputation. And so, you know, at this time, it was more about trying to connect with people, and that rings true as a broker, connecting with almost 200 agents that we have here in our company, and then trying to get out there and sell. And so it was more about the people, more about the customers. And I think safety was first. The business will come back. We've gone through cycles before. You know, it's kind of interesting listening to Dave and Akil talk. You know, when the mortgage meltdown hit, it did touch the commercial business, but not like it touched the residential business. And Dave, now you see the reverse is true. Now here's the pandemic that has affected more of the commercial side and investment side, and the real estate is not as affected. So it's kind of interesting how this cycle of business kind of comes around, and yet at the end of the day, we come through it, and we find a way to persevere, and these things make us better. And as crazy as this is, as terrible as this is, it has made us a better company. And I think it's made all of us better, just in the spirit of helping people.
Yeah, I think one of the things that I've seen in just in our neighborhoods and our communities is so many businesses reaching out, small businesses reaching out to others, individuals reaching out to their neighbors. And it's just been really wonderful to see that, you know, people are pulling together, and, you know, that we're all in the same situation where we're handling it, you know, maybe differently. We've got different circumstances, but we're all coming together to do that. So I think it's been great. Excellent. Dave, I want to switch it up a little bit and ask you what you see about property values and development projects. How are they affected by all of this?
Well, that's the absolute million-dollar question in all of this. And it's interesting because one of my professionals shared with me a disclaimer that now, you know, our company has circulated inside the firm related to, we have a large appraisal business, as well as we've got people that are always approaching us for what we call broker's opinion of value. And here's how the disclaimer reads regarding COVID-19. Comparable sales prior to this event are less reliable for determining property value today. The impact will be affected by the scale and the longevity of the pandemic. So
Okay.
that speaks volumes in terms of the context. Well, why is this? Obviously, I said earlier that we've seen a 30 to 40% decline in transactions on the investment side. But why is it disrupted? Well, it's because rent and cash flow on multi-tenant properties is disrupted. And then when I discussed the property management issue regarding these enhanced cleaning standards and everything else, you've got operating expenses that are going to increase. And then, some buildings are going to have capital improvements in order to make people comfortable in being in the buildings going forward, to make them touchless. So those are some elements that are in play. And then you look at the debt markets. The debt markets are very disrupted at this point in time. In particular, pricing for conduit mortgage financing, which has been a significant financing tool in commercial real estate transactions. And then when it comes to development projects, construction loans are really kind of unavailable. We're seeing some projects go forward that closed financing right as this thing hit. But I think if you're going today, and we've had an 8-year run of significant development projects throughout Northern Ohio. And I think we're going to have a big pause because of you can't assess the risk, and clearly the lenders aren't going to, they can't get their minds around what the values are. So it's going to be very disruptive. But I can say that industrial is the most solid asset. That'll retain value as I see it. Tight markets and the like. Hospitality and retail going to be incredibly affected. And then multifamily downtown. We've been on a roll, but how is this whole thing? We've got a lot of product that's coming on the market that'll be delivered. How do we underwrite the demand side of all that? So that is going to affect values. And my guess is that we're also going to see some distressed sales in the coming months. Those of you that think about the bell curve will be in the outliers of the bell curve, because certain owners are just going to look to monetize, and some lenders are probably going to intervene if we have some foreclosures and receiverships. But we'll see. Going back to 2008, lenders had a heck of a lot of regulatory pressure on them. I think there's already been some discussion within the Federal Reserve and other regulators that, look, we're not going to have a repeat of the credit crunch 2008 and 9, 10 as an overreaction to what's going to be a near-term cash flow and occupancy problem for owners and investors in real estate. So a very complicated topic, but interesting times in which we live.
Yeah, absolutely. Very interesting. We'll see what happens on the other end of this, and we'll all be better for it, I believe. So I have a question for you, Akil. What area of business do you think will increase due to COVID-19? And how do you plan to attack the market?
So on our residential side, I think that we're going to definitely continue to be in the seller's market. Jim spoke a ton about that in his comments today. And, as real estate professionals, I think the way that we're going to need to be relevant is just attacking the market from all the new innovation that we've seen. Obviously, Zoom, you see new innovative ways that title companies are doing closings. Obviously, we all use, and if you're not using, you should use electronic document signing and really utilize the technology in this time. And then I would say for us, from a market attack, we will really look at our CRM systems. And as we speak to our customers and clients, I think as real estate professionals, we have a responsibility to promote buyer confidence. as well as speaking the great things about our industry so that we can limit any issues that potentially could arise as we move through this pandemic. And we're resilient people. We've gone through many ups and downs in this industry, so I think that we will be fully prepared for what's next.
Fantastic. Fantastic. And for all of you that are watching or listening today, if you have questions, please share them in the chat. We would like to take some questions as soon as we can, and we'll try to get to all of them. So please do share them in the chat, and we will try to respond. I do have a question that's come through the chat, and I want to put this out to Jim. And the question is regarding the home warranties, and it has to do with the current ban on Freon and AC units that's soon to start. The question is, do you feel that a home warranty can impact the sale of the home during this time?
That's a good question, Allie. I think that one of the things a seller needs to understand is that as much as there needs to sell the house, they have to understand that that house is going to be, it's going to have to service the buyer. And what I mean by that is that certain houses in certain price ranges are going to have certain requirements, whether from a lending side, that are going to have to be met. So I'll use an FHA loan. It's a great product. It affords most people to buy a home with little down. And you could have a more debt than conventional lending. But the thing about it is that when people buy a home, they usually extend all the cash they have to purchase a home. So the last thing that they want to do is to get into a home and then a furnace breaks down, or air conditioner breaks down, or a plumbing issue occurs, or electrical box blows, or any of those major expenses that come up. The home warranty gives the buyer peace of mind, but more importantly, it allows the seller to sell the house and to be able to move on with the next stage of their life. So for a very small price, you've got a great deal of security that comes with the buyer buying the home. And the things that you mentioned are things that are because of the old systems in the homes, Allie. Is that what you're referring to?
Yeah, the Freon and the AC units that are going to be soon changed, the regulations for that.
Yeah, so for a homeowner to make that conversion themselves is very, very expensive. And a home warranty product, and you should know the conditions and the terms of the home warranty. Every home warranty program is different and has different conditions and pays certain amounts for upgrades. But if you have a home warranty product that provides the conversion as part of the warranty and replaces or repairs the unit, I think it's a wise thing to always have a home warranty offering from a seller's side to a buyer. And then more importantly, if the seller's not offering, I think it's important that a buyer ask for a home warranty just for peace of mind.
Good, good, thank you. Another question that we have from the chat, and I'll give this to Dave. What are the April statistics for office tenants paying rent? And the suggestion here, they said that 95% is what they heard, but that seems high to them.
I would just be guessing because I don't know who really is compiling those statistics. I think that especially on the office side, that number may be, I think a lot of tenants did pay rent in April in the office market because people weren't really seeing the impact of this on their business. And it's fascinating that like law firms, until you get into it, you didn't realize that so many law firms make a lot of their money through litigation. And with the courthouses being shut because of state mandates, they're not litigating. So it affects law firms more than you might think. And so it's a fascinating number. I mean, I would say that on the retail side, we know that, if 60-70% of the tenants paid rent in April and May, that'll be a high number. So I'm sorry to speculate, but I just don't have a good database.
No, that's helpful. Thank you. Thank you. And Akil, a question from the chat. What do you see the impact will be on any new construction of residential units?
Let's see. Okay, so from a new construction perspective, I would say that the impact is definitely going to be obviously with the builders, and if they're able to secure financing, is really where that's going to be impacted. And then obviously on the buyer side, as long as their employment has not been hindered during this period of time, then they should still be able to move forward with the loan. But as long as the construction company, if they're not able to secure funding to continue those building projects, then you may see some hiccups in that.
Okay, very good. Thank you. And Jim, there's a question here I want to pose to you. The residential market stats show that the March inventory was down, but sales were up compared to last year. So any predictions on what the stats are going to look like for April?
Allie, I just think that we've been dealing with a shrinking inventory for quite some time. I don't know the exact date, but I probably say at least probably approaching 36 months. And what's been happening is that the absorption rate, and that is where the number of homes that go under contract in relationship to the number of houses that come on the market, is skyrocketing. The demand and for buyers to purchase homes, for anyone who's in the market or who knows someone who's selling their home, right house, right price, right location. There's a line of people that are wanting to make offers, and so I don't think that's going to change. I think that here we are. We had a tremendous decrease in interest rates. Some people are going to take advantage of that by purchasing a new home. Why put money into their existing home? It doesn't have what they want, and this pandemic may just give way to that type of thinking. So I don't see it's going to change. I think that it's going to be, Akil said it, it's a seller's market. It's going to, I think it's going to continue that way. Again, it'll do a couple of things. First of all, it'll give people the optimism to put their house in a market. It does create a problem for buying because if you have to sell before you buy. We may give way to some different loan products that are out there. The bridge loan was a very popular product way back when, and there might be some hybrid lending that will come from that if we continue to see the shortage and shrinkage of inventory. That's my take.
Very good. Akil, how do you think the pandemic will affect residential property values?
So property values, I think we won't know probably for a few months just because we're in the middle of it. I won't say that they will go down or up. It'll be something that I think we all just have to watch and realize that this is just the time that we're in. In 2008 and prior to that, values tanked immediately, and we're just not seeing that, especially like on the residential side. Most of my agents are seeing multiple offers and over asking, and appraisals are coming in at value, and we're seeing deals close. On the commercial side, you heard Dave speak about a lot of things that are going on in that area, and it's time will tell. So I just say, we all need to keep our ear to the beat and the pulse and just see and track, what's going on in the market. Good,
good. Now this question is for all of the panelists, and I'll start with Dave, if you would like to respond. In New York City, there appears to be a mass exodus to the suburbs, so less dense areas due to the virus. Do you see or expect to see that in Northeast Ohio? And for Dave, I'll say in more of the commercial segment. Do you see that happening?
Interesting question. And, obviously we've had this incredible period of time in the past few years where, because of the impact of the millennials who wanted to live in dense, urban, mixed use areas, we actually saw an in-migration of office tenants from the suburbs to downtown. The question really is, it'll be interesting as to whether this reverses and people say, oh, I just don't want to be in a dense environment. I want to be in a suburban location. But those are massive cultural things that we got to see what the impact is going to be in the intermediate and in the long run. I am a big advocate for downtowns. I've been a downtown person most of my career, but the jury's going to be out on this one because, at this point in time with the pandemic, we need a long-term solution, and we're not going to have it until, for some time yet, till we have a solution to this.
Good. Good. So on the residential side, same question, and I'll pose it both to Jim and Akil. Do you see or expect to see any change in Northeast Ohio with people moving out to the suburbs? And Jim?
No.
All right.
Go ahead, Jim.
No. I think people are going to want to stay where they are. I think people want to get back to normal. They're going to beat this thing. We're going to beat this thing. Life is going to go back the way it is. And I think the downtown businesses and the restaurants, I'm very optimistic. I'm not saying all of them are going to come back, but I think people want them to come back. People want to go back to the way it was 60 days ago. And so they're not going to let this virus affect them. I don't see it. And I don't see them making a huge change or moving a shift from urban areas to down to the suburbs. If you want to live in those areas, you want to be close to everything. More than ever, this is the time to be close to everything, right? Because you've been separated from things now. So, Dave, that's a plug for you, buddy.
Good, Akil.
Yeah, and I would just add that we all just need to continue to listen to what the reports and the CDC is saying so that we can follow what's proper and we don't get caught into a web of misinformation and then we react on it. And I think that we've seen a lot of that through this pandemic thus far. And it's vital just to follow what the statistical information is saying and then making sure that you're at least listening and following what your local government is advising you to do. And I just don't see that happening. So
Good. Very good. And Dave, a question from the chat. Are any local government policies impacting your business or your clients? Some have heard, this panelist has heard from some agents with a concern about point of sale inspections or something that the city is doing to agree to let the city inspector conduct interior inspections. And I suppose that's more for residential. But anything that you're seeing in the commercial with government and business affecting your business and clients?
Absolutely. I mean, our process of completing transactions is a long one. And, so we count on whether it is municipal or county government in order to, whether it's zoning changes, whether it's permitting, whether, occupancy permits, construction approval and things like that. So we have had some challenges just because, municipal and county government have been having to deal with their own issues of, what has been mandated in order to deal with the pandemic. So, the truth is, yeah, there's been some disruption, but it's understandable why there is.
Good, thank you. And Akil, have you seen, any of your clients seen issues with point of sale inspections? There are some that are seeing that Point of sale inspections will be required after the city lifts their stay-at-home orders, and I'm wondering if you're running into any of that.
So surprisingly, my team, we're enjoying the current point of sale environment. Many of the cities are offering virtual point of sale inspections. We just went through one with Shaker. I'm clearing that one, I think today or tomorrow, or early next week for a closing. And we're seeing that it is actually not slowing the deals down, but it's actually becoming a little bit more efficient the way that the cities have done it. So maybe this is a way for the cities to realize that they can kind of become a little bit more expeditious in their process. I see Kamala Lewis from Shaker is online here, and thank you for putting that program in place because it's great.
Good. Very good. And I have one further question from the chat before we wrap up, and this is for Jim. Given that agents are now adapting to working remotely, how important is a physical brokerage office in the future?
Well, I think Dave talked about it. That many companies are really evaluating their P&L and saying, is it something that requires to have a physical office? There still is a need to be local. There still is a need to be present. How big of that presence, how much space do you need for that presence, how many employees you need for that presence, I think is all the questions that we're all wrestling with right now. We've had many of our staff, almost all of our staff, work remotely or work in such separate areas that, to avoid any kind of interaction, social distancing. It's worked. So it's the idea that you can't have a company with employees that are working remotely and still be productive, it's just not true. And so I would say that there is going to be a change in that. I think that that's something that most companies are going to look at and consider, do we really need this? And even, the notion of having a space for our associates was always a key thing. You need to make sure that they have a desk, or they make sure they have a phone, and, they have all, those things are pretty much gone. Slowly but surely they've been slipping away. With this pandemic, it's given the real eye-opening experience to say, hey, I don't know if we need that. Mm-hmm. The agents don't need it. They're not requiring it. As a matter of fact, the agents realize that they can do just as much and be just as effective remotely, especially in light of all the technology that we have, the digital services at their fingertips, and different ways to communicate that we're finding just right now. So I don't know, Allie. I think Dave's going to have a few more listings on his hands.
Well, and I think the main issue is that we are all here to service our clients and make sure that everything we do is helpful to the consumer. And so being able to do it remotely and work in the way that they need us is important.
Sure.
So, very good. So thank you so much, everyone, for being here. I really appreciate it. The Akron Cleveland Association of Realtors appreciates your time today. And I wonder if we can just finish off. Do you have any final words that you want to share with us? And I'll pose that to each of you. Dave?
I would just say, stay safe, everyone. It's these are interesting times, and I think Akil's words of the holistic view of our families and our coworkers. We need to be looking out for each other. So I wish you all the best.
Very good, thank you. Akil?
Yes, same as Dave, and just I want to thank ACAR, Allie. You did a great job this morning. The panelists. Sandy and Mike over at ACAR and all the guests this morning. And we just say a special prayer for the thousands and thousands of people who have lost their lives and their families. So I'll leave it there.
Thank you, Akil. Jim?
Yeah, Allie, thanks again for hosting this, and ACAR as well. Akil and Dave, great talking to you guys and hearing your perspective on things. It's, this business is not about us. It's about everyone else but us. And I think this is a time that we've really come to realize how important it is that we show that we care and we do the right thing. and many of us have, and will continue to do it, and we're committed to do it at our brokerages and even in our profession. And again, I want to echo what Akil just said, but more importantly, thanking all those people who have risked their lives helping others to beat this and just comfort us has been quite a feat. So thanks again, Allie.
Good. Thank you. Thank you all very much for being here on the panel today. And thank you all for joining us and hearing our conversation today. Stay safe out there. Thanks for being here. Have a great day.
Thank you.